What happens when you spend $100,000 on mortgage leads on TikTok ads, people that are actually looking to buy a home? In this video, I'm gonna fill you in on what happened, what went wrong, what went right, and a lot more. Let's get into it. So we had made a video before when we had spent $30,000 on TikTok ads for mortgage leads, and a lot of things, there are some things that stayed the same between now and then, but there's a lot of things that have changed as well. TikTok and their ad platform especially is rapidly changing. They're updating things almost weekly at this point. So it's really important to stay on top of what they're updating and new features they're adding, and they're almost evolving and maturing into what you would see maybe on a YouTube ad platform or Facebook ad platform. One big change that happened that kind of really changed the whole game for us was the introduction of household income targeting. So on TikTok, you can obviously include and exclude certain age ranges, and now you have the ability to include and exclude certain household income brackets. So there's like top 5%, top 10%, top 10 to 25%, top 25 to 50%. On different campaigns, we'll experiment with different household incomes, but as soon as they introduce that, you would be surprised on how accurate TikTok's data is in terms of knowing people's average household income, because it was night and day. But that didn't really last forever, because if you read into their special ads category policy, it actually says that if you're running anything to do with employment, credit, or housing, then you can't include or exclude household income brackets. But the beautiful part of this golden age for us was that with TikTok evolving as fast as they were not really rejecting our ads because of the household income targeting. So we were able to use that for the most part the last 6 or so months that it's been released. And I would always say, like, right now is the golden age, but eventually they're gonna start cracking down on it as TikTok's ad platform matured and more advertisers came onto it. They were gonna start rejecting us, and sure enough, it was about a month ago when we first saw the first rejection. They started rejecting our ads because of special ad categories. So we had to find some workarounds, and there are actually some tricks that we've found out recently where we can still target household income. And then for those accounts that for some reason we can't work around it, there's a strategy that we've tested that has actually worked extremely well using the instant forms that you can make on TikTok. So this is how we used the TikTok instant forms to get higher incomes, even when we couldn't target those income ranges. If you're not familiar, TikTok allows you to create your own instant form inside of their ads platform. It looks really clean. It goes with the TikTok platform really well, loads super fast, and you can add questions, however many questions you want. You can also add logic to the forms, meaning that if somebody answers a question one way, maybe they see a different question next, maybe they say more questions. So the way that we did it is if they answer a lower income, in this example we're using the income example, we do it on some of the other questions too, but if they answer a lower income, then they see more questions than somebody who answers a higher income. So what that allows us to do, because the more questions that you ask on a survey, it lowers the submission rate. So if somebody answers a higher income, they see less questions, so it increases the submission rate for those people, decreases the submission rate for people who answer the questions that are not the ones that you want. And TikTok optimizes around conversions. So it actually doesn't know that you want people like with this answer or that answer. It just optimizes around conversions. So by kind of manipulating the submission rates on lower income and then higher income answers, we're able to get the algorithm to optimize around finding audiences that have similarities to people who are converting. One of the common factors is that the people who are converting tend to have higher income because that's what they're answering on the survey. We've made it easy for them to go through. Hopefully that made sense. I know that was a mouthful, but we've tested it. It actually works really, really well. And you can do the same thing on the other questions on the form, but typically you want to keep the survey around 4 questions that are required for people to answer to come through, because if you start adding too many questions, it's going to lower the submission rate. So we have 4 main questions that every lead's going to answer, and then depending on the answers to those questions, we may add other questions if they answer a certain way, and it allows us to kind of manipulate the algorithm to optimize around conversions We do the same thing with down payment. We do the same thing with the credit score. We do the same thing with employment status. If they answer negatively, they see more questions. Answer positively, they don't. And over time, the algorithm starts finding people who fit what we're looking for, people with higher scores, higher income, and employed, and have money for a down payment. So over the course of the last 4 or 5 months or so, one thing that we learned and that we're going to try to take into everything going forward is you don't want to be over-reliant or over-leveraged on one thing. For example, when the household income was introduced, we went all in on it, right? Because it was just so amazing. The results were so great. And then whenever it started getting taken away, we had to adapt. Now, that's another thing. You want to always be in a position to adapt, right? But if you can be prepared before you have to adapt, then it's not going to be as hard of a transition. Luckily, we did figure out some ways to get the household income targeting on most accounts, and even the ones that we can't, we figured out a way to use the instant forms. But this is also something that we noticed with a lot of loan officers coming out of 2021 into 2022. In their businesses, they were kind of over leveraged and over reliant on, they're all referral based. And the market got tough and their referrals started drying up and they had to try to adapt real quick. Those who adapted are still here today. Those who didn't, either struggling, right? And it's hard to adapt, especially when things are kind of like crunching in on you. So that's why before you get to the point of having to adapt, you want to already have some other things that are working for you. So with that being said, you don't want to just be all in on online marketing or just one platform or just realtor referrals. You want to have multiple things that are feeding your business, right? If the referrals dry up, you are going direct to consumer. If your online leads aren't going as well, then maybe you're getting some referrals. And really, it's not a question of which one is better. Things work best when intent, especially direct to consumer online marketing and getting realtor referrals, because then you have leverage to get realtor referrals. That's a whole other video. But into 2023, one thing that I highly recommend, one thing we're doing that I'm going to tell you about here in a bit, is kind of adapting before you have to. We're working on some really cool stuff going into this year, but if you're just on, say, one social platform, maybe try to start a second. And it's really easy to start a second one because a lot of times you can use your content on the other platform. You just repurpose it. If you're doing online marketing, focus on referrals a bit more, but still keep doing what you're doing. Have them work together. Have them improve one another. So what's our plans going into 2023? Well, one thing that we have been testing out for the last couple of months is YouTube ads. The reason is YouTube ads in 2023 is going to be a huge opportunity, as well as TikTok. But here is the reason why. So you've probably noticed by now that YouTube has something called YouTube Shorts. They're vertical videos that are meant to compete against TikTok. Recently, about I think it's 4 or 5 months ago, they announced the algorithms between the shorts and the long form content are actually connected now because they were not originally. So now they get recommended shorts based off long form videos they watch and vice versa. Another thing that YouTube has more recently announced, this is just the past month or so, is the YouTube Partner Program and the revenue splits for YouTube Shorts creators. And why does that matter for you and me? Well, if YouTube creates a superior compensation program for Shorts creators, then more content creators from TikTok and other platforms are going to start moving to YouTube. Because with short form content, yes, the reach is huge on TikTok, but they usually have a hard time monetizing their content. YouTube has a very, very established and proven revenue share model that they do with their creators. So the more content creators that move to YouTube, viewers start to move to YouTube. And then this year, as YouTube Shorts get more and more focused, I wouldn't be surprised if about 6 months from now, vertical video ads on YouTube are killing it. So we're testing out horizontal videos and the vertical video ads. And another reason that YouTube is such a huge opportunity is because it has targeting options that other platforms don't have. For instance, you can target household income on YouTube and Google. I mean, even though we're getting away with targeting household income on TikTok, just don't tell anybody. But you can do it. It's not against YouTube's special ad category to target household income. You can also target industries that they work. You can get really specific with location, and YouTube has a massive amount of data. To put it into perspective, Google is the largest search engine in the world. YouTube is the second, and Google owns YouTube. And then what email do most people use? A Gmail. Well, Google has access to all of that data. They know every person and every company you're subscribed to, email you send, receive, everything you buy, because your receipts get sent to Gmail. I know it's kind of messed up, but they have that data. Also, the Google Home devices and the Google Analytics tags. Put this into perspective, Facebook's Pixel is on about 11% of websites on the entire internet, which is actually a lot. And Google's Analytics tag, their code is on 55% of all websites on the internet. So the amount of data that they have on each person is enormous. And that's good for us because then we get to use that data to target potential home buyers. Also on YouTube, you can target what's called an in-market audience. This is an audience that YouTube and Google have established based off of their searches and their activity on and offline. They are currently in the market for a home. So our plan going into 2023 is actually combining the two with the hyper-targeted methods of YouTube and the huge reach and blue ocean low cost of TikTok. We plan on combining those, and we're still testing things over the last 2 months. We've made a lot of progress, but things are looking really, really good. I'm gonna make a video in the future about the results of these tests and the entire the system. So make sure you subscribe to check that out. If you wanna see the final product of the system that we made, make sure to check out this video right here. It won't be there for the first month or so that this video is released, but if you're watching it about a month after it's uploaded, then it'll be right here. If it's not there yet, make sure you subscribe so that you see that video. We're gonna cover everything that we've built out with connecting the TikTok ad system that we have with the new YouTube ad system going into 2023. Look forward to seeing you guys there.